In this video, we're going to look into the recent price action and technical analysis of Rivian, discussing the latest news surrounding the company, and wrapping up with our recommendation on whether to buy, hold, or sell the stock. Over the past 6 months, the stock has been skyrocketing from $13 all the way up to an impressive $28. In more recent times, the stock entered a corrective phase, retracing to around $20. The stock price seems to be a crucial support zone that the stock has bounced off of. As one of the biggest companies to go public on the Nasdaq, Rivian was priced at around $150 a share, before the long and sometimes significant sell-offs began throughout its existence on the public exchange. The stock has gone through a bottoming phase and is now trying to reach a region that is a little bit more comfortable, which seems to be achievable since the market sentiment no longer perceives Rivian as a bottomless pit. The current support level seems to be resting on fairly solid ground, as the company has been able to catch a breath and move the narrative back to its own fundamentals. We should also point out that what's ahead may not always be prettier compared to what already happened. After all, the electric vehicle sector is still on the road of acquiring mainstream recognition and to prove to the stakeholders that batteries can replace combustion engines at a large scale. Nothing is set in stone just yet, as the issues of supply chain, availability of charging stations, independent range, and the price points are some of the hurdles still down the road. Moving on to the latest news regarding Rivian, the company's fundamental picture seems promising. Rivian is experiencing explosive growth, boasting almost 100% year-over-year electric vehicle revenue increase. What's more encouraging is the decrease of their cash burn, showing that their cost-saving measures are bearing fruit. This is definitely a positive sign for the company's financial health. For a capital-heavy company like Rivian, making sure that they have enough cash to maintain ongoing operations is always something that can be tricky to do, especially when it often involves taking on more debt, or issuing more shares and diluting the shareholders in the process. In the short term, things do look promising. The stock seems to be consolidating around that $20 to support electric vehicles, and the technical indicators suggest potential upward movement. We see a possible range between $20 and $22. A breakout above $22 could trigger a significant positive signal, potentially leading to a 5 to 10% increase. In the world of investing, nothing is static. Markets rise and fall, trends emerge and fade, and economic forces can make or break entire industries. Today, the electric vehicle sector, once heralded as a surefire bet, is facing an ominous convergence of factors that are impacting both its equity value and demand. Rising inflation, the burst of the electric vehicle bubble, a looming economic recession, the absence of monetary stimulus, supply chain issues, and geopolitical uncertainties have all cast a shadow over the once radiant future of electric vehicle stocks. One of the most potent factors currently affecting the equity value of electric vehicle stocks is the specter of rising inflation. As inflation surges, the purchasing power of consumers diminishes, impacting their ability to invest in high-cost items such as electric vehicles. Inflation erodes the real value of money, making it more expensive for consumers to purchase electric vehicles, even if they are committed to reducing their carbon footprint and embracing this sustainable mode of transportation. Furthermore, inflation has a ripple effect throughout the economy. It increases production costs, forcing automakers to pay more for raw materials, labor, and energy. These higher costs are often passed on to consumers in the form of electric vehicle prices. In an already competitive market, where electric vehicle manufacturers must contend with traditional automakers, this can be a significant disadvantage. Investors are wary of electric vehicle companies grappling with shrinking profit margins and the potential for lower sales. In recent years, electric vehicle stocks experienced a euphoric surge, reminiscent of the dot-com bubble of the late 1990s. Investors poured money into electric vehicle startups, anticipating exponential growth and profits. As the electric bubble burst, many overvalued companies were left exposed. This sharp correction has weighed heavily on the equity value of electric vehicle stocks. The burst of the electric vehicle bubble has led investors to reassess the sector's prospects, particularly for companies that have yet to turn a profit. The focus has shifted from hype and potential to fundamentals. Investors are scrutinizing balance sheets, cash flows, and growth prospects more carefully. This has resulted in a more cautious approach to investing in electric vehicle stocks, with a preference for companies that demonstrate a clear path to profitability. The global economy is showing signs of a slowdown, and there is growing concern about a looming recession. Historically, economic downturns have had a detrimental impact on the automotive industry as consumer spending on big-ticket items like cars tends to decline. This poses a significant challenge for the electric vehicle sector, which relies on robust consumer demand. During economic recessions, consumers often prioritize essentials over luxuries. While electric vehicles may offer long-term savings on fuel and maintenance, their higher upfront costs can deter potential buyers when financial uncertainty looms. Thus, the prospect of an economic recession casts a shadow over the near-term demand for electric vehicles, which could impact the equity value of companies in the sector. One of the significant drivers behind the rise of electric vehicle stocks in recent years was the availability of easy monetary policy. Low interest rates and quantitative easing programs provided access to cheap capital, fueling innovation and growth in the sector. With central banks signaling a shift towards tighter monetary policy, this era of abundant liquidity may be coming to an end. The absence of monetary stimulus can have a dampening effect on equity values, particularly for high-growth sectors like electric vehicles. Higher interest rates can increase the cost of borrowing for companies, reducing their ability to finance expansion and research and development. Additionally, rising rates may draw investors away from riskier assets, including stocks, in favor of safer alternatives like bonds. This could lead to a decline in demand for electric vehicle stocks, impacting their prices. Supply chain disruptions have become a recurring theme in recent years, affecting industries worldwide. The electric vehicle sector is not immune to these challenges, which can lead to production delays, increased costs, and reduced profitability. A shortage of critical components such as semiconductors has forced automakers to cut production, limiting their ability to meet consumer demand. Supply chain issues can lead to reduced electric vehicle revenue and profit warnings, which can negatively impact the equity value of electric vehicle stocks. Investors are closely monitoring how companies in the sector navigate these challenges and whether they can adapt and mitigate supply chain risks effectively. Geopolitical uncertainties, including trade tensions and political instability, can have a profound impact on the equity value of electric vehicle stocks. Trade disputes can disrupt supply chains and increase production costs, while political instability in key markets can threaten sales and investments. Shifts in government policies and regulations can significantly impact the electric vehicle sector. Changes in subsidies or incentives for electric vehicles can influence consumer demand and company profitability. Geopolitical squabbles can create an unpredictable environment that investors find less appealing, leading to volatility in stock prices. The confluence of rising inflation, the burst of the electric vehicle bubble, a looming economic recession, the absence of monetary stimulus, supply chain issues, and geopolitical uncertainties presents a challenging landscape for the equity value and demand for electric vehicle stocks. Investors must carefully consider these factors when valuing their investment strategies in the electric vehicle sector. While the long-term potential for electric vehicles remains promising, the road ahead may be marked by turbulence. Companies that can adapt to these challenges, demonstrate strong fundamentals, and maintain a clear path to profitability may emerge as the winners in this electric vehicle solving landscape. However, it is essential for investors to exercise caution and conduct thorough research before making investment decisions in the electric vehicle sector. Considering the strong fundamentals and the technical signs aligning, we recommend a cautious buy stance for the short term. As always, remember that investing involves risk, and it's important to do your own research or consult a financial advisor before making any decisions. That wraps up our analysis for Rivian stock. If you enjoyed this video and found the analysis helpful, don't forget to hit the like button and subscribe to our channel. As always, keep an eye on the market and stay informed. Thank you for watching, and we'll see you in the next video.